Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 9th of May, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So it's a bank holiday weekend.
It is, yeah. Bunting up everywhere, lots going on. It's just, you can imagine what the weekend would have been like with this nice weather that we're having and being a VE Day bank holiday. It's a bit of a shame, really, isn't it, in a way? But
it is, yeah. So lots of presumably virtual street parties going on, and it's all very different, isn't it? It's not what was planned.
It's very surreal, isn't it?
And
it's a bit like that with some of the headlines we're actually going to be talking about this week as well, because we talk about the new norm and the new sort of thing as we come out of all this that everybody's talking about. But actually, this is, will we ever experience anything like what we are currently going through again? With the activity within the automotive sector, the impact on, the UK, European and global, and just saying there about the VE Day, that 75th anniversary of it, and what would it have been like? And it's a very surreal moment, isn't it?
Yeah, and in fact, one of our stories, I think, references just after the war, 1946, and that's to do with the car market. So we'll get onto that. But yeah, you're right about headlines, because I think in a normal week, rewind 2 or 3 months ago, any one of the stories that we're going to cover today would have been the biggest story of the week, and we've got 6 or 7 of them.
There's this feeling, and we were talking before we recorded, but that you can feel this pent up starting to happen now, can't you? There's this sort of feeling that the return of sort of restriction lifts and things like this that everybody's talking about, but you see it in the headlines, don't you? You feel it in the headlines, that the sort of the change of the tone around now.
Yes.
What the market is going to be like, what we're going to do when we get back to the market, and some of the impacts of what this has caused on the sector and will cause on the sector.
Yeah, and some of the stories we cover today will actually be looking at what happens next, what happens with startup, what once the lockdown is lifted. So, and in fact, we've got an interview at the end of the headlines with Andy Fields of Indicator. Now, this is really interesting because he's talking about used car prices and sales trends across European markets, including some of the markets that have reopened after their lockdown. So he's talking about places like Germany and Austria, where they've bounced back really strongly. So we asked him about why, and what are the ramifications for the UK. So do stay tuned for that. As I say, that follows the headlines this morning.
So as you say, Curtis, I mean, some of the stories we've got this week, we could have talked around for 10 minutes on it alone, couldn't we? 10, 15 minutes on a single one of these stories. But actually, we'll try and get through what we've got this week. And we're heading over to AM Online first. And this is that car retail seeks sales stimulus after a 97.3% COVID-19 lockdown slump. So obviously the new car figures have come out for April, and as the headline indicates there, we've experienced a 97.3% decline. But there's statements there from the Sue Robinson at the NFDA and others around how they want in the government and the sector to start to stimulate demand again as we start to come out of the lockdown.
Yeah. Now, usually when I get the SMMT figures, I get a couple of highlighters out and just highlight the ups and downs. But
there's not many ups.
There are no ups. Everyone is down in April, understandably so. But I have actually got 3 fun facts from the figures. Do you want to hear them?
Yeah, definitely.
Here we go. First one is BEV, so battery electric vehicles outsold diesels for the first time. Yeah.
You heard it here once, yes.
Yeah. The second fun fact is the top-selling car was the Tesla Model 3. And if we look at the top-selling brands, so the third fun fact, Tesla was the top-selling brand, selling at least 658 vehicles. We don't know the precise figure because they're not actually listed as one of the SMMT accredited brands. But we know that the Tesla Model 3 sold 658 cars. They were followed by Vauxhall, 479 cars, and Jaguar, 396 cars. So top three selling brands.
Yeah, and as you say there, the Tesla 3 in the top listing, 658 cars sold. And then Jaguar I-Pace, 367 cars sold. So it was the I-Pace that put Jaguar in that position, wasn't it, for April. So, yeah, it's one of them, isn't it, that years to come when we start to compare year on year and what happened through 2020 in terms of analysis and performance of models, etc. These are stats that you never, hopefully never ever going to see again in an odd way. But these performances and top tens, they are unique for this, aren't they?
Yes, yeah, and the figures have prompted the SMMT to reforecast, and we'll probably come on to this in another story, but they've reforecasted the market to 1.68 million, which will make it the lowest since 1992.
Yeah, so let's say there's the NFTA there are calling for some kind of stimulation of the sector there. So they're talking about obviously the coming months, that it's vital to evaluate the support packages that may stimulate the market and ensure a sort of a long-term stability of the sector, which is obviously key to both the UK economy and provide obviously the maintain employees as well for the sector, and we'll talk about that as well shortly. But a lot for the government to get their head around into it, and I think we'd mentioned it once before that the government have been focused on the lockdown and liquidity of businesses and that side of things, but it's when they've now got to start switching that towards a stimulus of the economy now, isn't it? And it's a different thing entirely. This was the banks have been focusing on stopping businesses going under and the economy crashing to levels that we'll see, but it's then switching over to how they're going to stimulate the economy now as we come out with this. So
yeah, of course, lots of talk about a scrappage scheme, which is something we picked up on last week when we were talking to Lee Swinard from KPMG. So lots going on there in the background. So it will be interesting to see what happens in terms of stimulating the market.
So we'll watch, and like I say, there's a lot to come, and everyone's going to be keeping a close eye on it, obviously. And then the next story goes over staying with AM Online, and something that we've been working on at Cox Automotive, and the headline is Cox Automotive predicts W-shaped COVID-19 recovery and a 29% sales decline. But it's more about not necessarily the numbers. I mean, you've said that the SMMT have reforecast their numbers, and what will the market look like for 2020? There's a lot to come yet, but it's more about why it could be like this and some of the sort of trends and observations around why it's happening and what could happen as a sort of an impact of COVID-19.
Yeah, and the W-shaped recovery is particularly interesting because analysts are talking about U-shaped recoveries, L-shaped recoveries, V-shaped recoveries. So what's actually prompted the thoughts behind the W-shaped recovery?
Well, we looked at it two ways. Is that there's a view that we could see the economy recovery in a W-shape form, as the government and other parliaments, etc., get pressure to start to lift restriction and stimulate the economy again. but actually you could cause that. Actually, you could see a series of lifts and then lockdowns again over a period of time as the sort of you're trying to bring the market out into some sort of economy. But we looked at it from a supply and demand perspective for the new and the used car market, and some of the interviews that we've had recently sort of highlight where the challenges are going to be, particularly the conversation we had recently with Lee Swinard at KPMG, because there is this pent up demand, and one of the stories that we're coming to highlight that shortly, but there is this pent up volume in new and used cars. So once we start to lift restriction or find the correct guidance of how retailers and businesses can interact with consumers, etc., and start handing over those vehicles, we'll see that. And some of the AM 100 guys talk about the volume that they're going to see as we sort of come out of this. Now, you could see that pent up demand straight away over the sort of the first month or two, but then you need to consider where is the stock then coming from for the used car market and the new car market. We talked about the challenges around the factories from the OEMs, the challenges that they're facing around staffing and production and tier 2, tier 3 suppliers, etc., and what impact that will have on the rental leasing sector if they can't get the cars. Can they replace the cars and then put those vehicles into wholesale? It's all that supply and demand is where we're sort of seeing a more of a W effect as we sort of come out of this through the next period of months, essentially. And we talked before the show, didn't we, around this, the rental sector. One, are they going to be getting the new cars to replace the cars that they've got on? Possibly not, because of the manufacturer constraints that are in place. But actually, what will happen if there's no, you mentioned it, I think, tourism, airports, things like this, and what the impact will be there?
Yeah, this is the big issue, isn't it? Because rental companies will be sitting on a lot of cars ready to be defleeted at the moment, and will they be needing to replace them in the sort of volumes that they would typically? I can't see it. I really can't see it.
Yeah, there's a few areas that we're starting to look at. The world of mobility, what that will look like as we come out of this in the short to medium term. And then that medium to long term, what will the green agenda look like around the clean air zones? We've already seen some of the deferment of clean air zoning taking place. What impact that will have on the SME commercial vehicle sector, what the manufacturers are going to do. There's obviously conversations taking place around the CAFE legislation that we've talked about a few times on the show, haven't we? And you've just mentioned there around scrappage. Will one of the government's initiatives be to introduce some kind of scrappage scheme, as we're talking with Lee about, but focus on the green agenda and the whole e-commerce world? And we had that interview, didn't we, with Darren Edwards recently, and he brought forward his platform to be able to operate digitally. And what will that look like in terms of that whole digital proposition for the retail and the wholesale sector? So there's a lot that we'll talk about learnings from the lockdown and what we've been going through, but actually what will the short to medium term impact be on certain areas, and actually what will permanently impact on other areas will be very interesting as we work our way through it.
Yeah, so it is very much a stop-start recovery, isn't it?
Well, yes, I believe so. And I think it's not obviously stating the obvious. It's not going to be a week on Monday everything's back to normal, everybody can go back to work, and it's the doors are open. We know that isn't going to be the case. There's a lot to get in place, and again, one of the stories talks about that, doesn't it, around the requirement of how you manage the processes and things through this is going to be challenging and interesting for the sector, to say the least.
Yeah. Now, the next headline is from Motor Trader, and it's 3/4 of buyers to buy quickly after lockdown. So this follows on quite neatly from the last story, and this is based on research carried out by eBay Motors Group. They researched visitors and people registered on the motors.co.uk website and polled the views of 696 of them. So these are pretty much in-market buyers looking for cars at the moment, and they found 38% of these active car searchers are not intending on postponing purchases despite showrooms being closed. So they're not being put off by not being able to go to showrooms because they can do all their research online, down to the point of actually ordering the vehicle and then contacting the dealer to see what the next stages are. But in addition to that, a further 17% are intending to buy as soon as the lockdown ends, with an additional 20% buying within the next 2 to 3 months. So this is actually really positive news, and I'm sure there'll be a lot of dealers listening today thinking that this is really what they want to hear, and this is good positive feedback from the market in terms of buyer intentions.
Definitely. I think this is there's a lot, like you say, it's not just pent up demand, it's just people wanting to do things, isn't there, and get out and purchase that vehicle that they intended to purchase. We talked about it around that nervousness to public transport, what will happen there. We mentioned it on the interview this week, didn't we, about that. What will the pricing, what will the demand of model mix of vehicles look like? But again, as you say there, Curtis, fantastic news that high percentages there of people that are intending to buy a car now, some immediately, some within 2 or 3 months, but it's positive news for the sector that the consumers are not put off, and they're still wanting to get out there and purchase a vehicle.
Yeah, and interestingly, two of the reasons why potential customers are postponing any decisions, and that's down to the desire to take test drives and to actually ask questions in person. So that's actually another positive, isn't it? Because when dealerships reopen, then test drives and face-to-face conversations can start to happen again, albeit in a different way. But this is what some buyers are waiting for.
And it kind of, we've talked about it, and you see it with some of the interviews with industry leaders, and the clicks and bricks statement that comes out from a lot of them, that they don't believe everything's going to go on into the digital space, and there's still a requirement for dealers to be there. And this, as you say there, Curtis, this really confirms that they still want to go and have a test drive in the car. They still want to go and ask somebody some questions, because reality is, if these customers want to ask a question, there's teams of people online at the minute to answer those questions. They can't test drive the cars, but they can get the questions answered. But this research really says that the customers want to go and talk to somebody in person and ask some questions to that person. So kind of commends that fact that there's still that human interaction that is required across the industry. So great news. So moving on to the next story then, we're going over to Car Dealer magazine, and they've obviously been doing a lot of interviews recently, and they've recently interviewed Darren Martin from Cap HPI, and they're talking about the used car prices face a volatile for a few weeks as Cap prepares to start moving values again. And this is an interview that James Baggett has done with Darren Martin, isn't it?
Yeah, and there's some interesting figures in this. So, Darren Martin's talking about valuations and the difficulty at the moment to come up with valuations, because there isn't that volume of cars in the market on which to judge them on. But he's saying that looking at older cars, so these are sort of 5 to 10 year old cars, they're likely to be the first to have data readily available, and they're looking at a possible dip of 3 to 5% on those older cars. But the story does note that some values have actually gone up, And this echoes research quoted last week by eBay, where some valuations had gone up in London and Scotland. So it's all down to having the volume there to base the data on. And Darren Martin's saying that he's looking at the moment at 10% of normal volumes, and more accurate figures can be applied once that goes up to something like 15%, and then some reliable forecasting can start to be rolled out.
And it actually does make a reference there as to what we were talking about earlier, that if the rental and leasing companies decide to flood the market with cars because of the downturn they've seen in their businesses, then it could cause a serious issue. And this is where the valuation guides, CAT being one of them, is this balance of the, that fire sale scenario where people are needing capital, needing cash in the bank, that they've got to get these vehicles moving and into the market, against those that are holding firm because that car is, they believe, and maybe it's right, that car is still worth the same price as it was on the 24th of March. And Dash Gupta is there vocal in the press in other stories that the market is frozen essentially, and there's no activity. What activity is taking place, albeit one of the stories does obviously indicate the activity levels, but that vehicle is frozen in time essentially. But how do you operate that against those that are needing capital, needing cash to survive? And that's the difficulty that the valuation guides are going to face as we return to the market. But again, want to see, maybe we'll get Darren onto the podcast one week and talk through some of his thoughts.
Yeah, definitely. Once he sees more than 15%, I think let's get him on and find out what's happening there.
Definitely.
So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on Apple Podcasts, Google Podcasts, Spotify, YouTube, Deezer, and SoundCloud.
So going back to AM Online and probably the stock market as well, because it's based on the stock market update, but we've got Cambria, and this is a story that Cambria considers redundancies as COVID-19 threatens Darwinian evolution of the car retail sector, and this is what you were referring to earlier. And it's an interesting story, an interesting view, particularly around obviously the redundancies that they're now talking about in the sector as we return to the market.
Yeah, you don't often get a dealer group boss quoting sort of Charles Darwin's theories, but this is all about survival of the fittest. And Mark Lavery does say that the group may be looking at 100 redundancies following the government's lifting of the furlough period. So, I think this is reflective of what's going on in a lot of groups at the moment. They are looking at the implications of the ending of furlough, whenever that is, and what that will mean to the businesses. So, he's been very upfront there, and he goes on to say that he expects 25 to 30% of car retail businesses to go out of business over the next 2 years as a result of the pandemic. So, these are the long-term ramifications here.
Yeah, and I think on with some of the interviews that we've had, that there is an expectation that there's we always talk about the dealer consolidation and what were happening pre-lockdown. From some of the manufacturer strategies around that reduction of their representation partners across their brand. But we know that there is consolidation. It's been happening for some time, but there is a view that this will accelerate it. Those that can't survive and those that decide to just exit because of challenges, or they've just probably had enough maybe in certain
Yes.
ways. But there is a view that actually it's not, out of the back end of this, it isn't going to be unique to the dealers. I think there's a view that there's possibly consolidation generally across the automotive sector, and it's not going to be just the automotive sector. We know that, but just talking about the automotive sector, that there will be potentially consolidation in a lot of the different areas of our sector. So it'd be interesting. But like you say there, you don't often get many quotes from in referencing Darwin to hear in it, and we had Robert Forrester, I think, recently was talking war references, weren't he, through some of his interview as well. So it's coming back to this fact that will we ever be experiencing anything like this again? Possibly not. But
it's worth adding that this story was actually on the back of Cambria's 6-month interims, which normally would be the headline in the story, but they were good. Revenues for the 6 months up to the end of February were down 1.7% to 303.1 million, but underlying profit was actually up 14.5% to 6.3 million. So that resulted in improved underlying net profit margin of 2.07%, which was up from 1.79% in the first half of 2019. So perfectly respectable interims there from Cambria.
Yeah, there's it's worth heading over to the stock market statement there, because Mark Lavery does have a few comments in the release, as you can imagine, but he talks around that they're pleased with the results from the first half of the financial year, albeit COVID-19 has had a material impact and overtaken the normal operation of the businesses as across the wider motor retail sector. But he does go on to say that the group has performed well in what were already difficult trading conditions, and that they were continuing to see improved results from the significant re-franchising activity of the previous years. And there's an interview that you can access to go and listen to Mark Lavery on the interview that we did with him, and obviously around some of the as he's referenced there, around that re-franchising of the business and the growth of the business pre COVID-19 lockdown.
Yeah, and you know what? He makes an interesting comment about how after sales could bounce back after the releasing of the lockdown, especially on the across the luxury franchises in the portfolio. He says many of the vehicles that we sell are designed to be driven, and if they are stood still for 6 or 7 weeks, the first thing their owners should do is bring them to the dealership for a service. So, interesting observation there.
I think that's the case for many, isn't it? I mean, the cars are just sat there. And the advice that you should be going out to your car on a regular basis, starting it, moving it, even if you're not going anywhere, but at least get the wheels and the brakes active and moving a little bit and getting it started up on a regular basis. But there's extension to the MOTs. We know that there's going to be service schedules that would have been missed through this period, warranty work that would have been required through this period as well, and checks and things like this. So you can see that there is that growth within that aftermarket that will really hit hard for the sector and be very positive. And the next story talks a little bit about that aftermarket that garages have been working through. And I talked to one dealer group this week that they've had staff in, not doing customers' work, but actually working on the stock in the business to get ahead, so that they're not getting tied down when consumers start to bring their cars in for servicing. So working through all their vehicles, all their used cars, to make sure that they're all serviced and ready, and not using up workshop space and technicians' time when it's going to be needed for MOTs and service work for consumers.
Yeah. So the next headline is from Car Dealer, and it's Virtue sells more than 1,500 vehicles during lockdown and reveals its plans for reopening in stock market update. So this is Virtue has revealed that since the lockdown, it has sold 825 cars to consumers, and it's racked up 749 fleet orders. So the guys there have been very active, and interesting I think in this story is Robert Forrester outlining some of the plans that they're developing to reopen showrooms, and the introduction of appointments, an appointments-based system, which seems very, very likely. And this does tie in with Robert Forrester's thinking on click and collect. We know he's very strong on online sales, and he's said in the recent past that the place to conclude this transaction is actually at the dealership. So come and collect your car from the dealership.
No, you're right, and we were saying that before, weren't we? But again, it was on the back of their financial trading update this week as well. That again, similar to Cambria. I mean, not great reading, but it could have been a lot worse. And they talk about that 98 of the group's 133 dealerships have had their after-sales operations were reopened in late March. 18% of the group's technicians have been actively working. April service labour revenue are expected to be around 1.7 million. So they're saying that they've got a very strong balance sheet with low levels of debt and significant assets. So it's not all doom and gloom, is it? That we've had an interview with Robert on the show, and he's been working tirelessly throughout this with his business and making sure that there is, where business is available, that he isn't breaking guidelines, etc. He is managing to do it, and the van businesses have been very busy. I mean, he does dominate that van market with their business, and they've been obviously doing quite a bit through that sector, haven't they?
Yeah, and finally, so last story this week. Now, this actually broke last weekend, and it's from AM Online, with the headline, Pendragon well positioned despite stalled Lookers merger talks. So last Saturday, Sky News broke the story that Pendragon and Lookers were in discussions on possible merger. And since then, Pendragon has issued a statement to the stock exchange confirming that conversations were taking place, but have now finished and will not be ongoing. So one of many surprises in recent days and weeks.
Yeah, social media was quite busy on the Saturday evening when that hit, straight out of Sky News there. But is it a case there's no smoke without fire? There was a lot of questions at the time whether it was fact, and was it Lookers were potentially denying it, but they did come out to say that Pendragon did say that fact, we did approach them, we did have those conversations, and it's now moved on. But again, we've talked on previous shows, haven't we, about the new man at the helm, Bill Berman. From the US there, and
yes,
you can kind of get that feeling that it's there's a lot to come, I think, from Pendragon. If that to actually, for that to come out into the media during what we are going through, in terms of the current state of the market.
Yes,
very, very interesting. And can you imagine the size of that group if something did happen? The size of Lookers and the size of Pendragon. What a complicated merger that would be.
It would be very complicated. It would create by far and away the biggest group in the country. And I think you're absolutely right. It kind of shows the aspirations of Pendragon. They have been through an unsettled period. But this to me smacks of new confidence. So it's going to be fascinating to see where Pendragon goes next.
And re-emphasises what Cambria we're talking about, and we were talking about on the Cambria story that there is going to be consolidation, acquisition as well. So I think it's going to be an interesting time. I mean, it is a time that I'm glad I am in this sector and doing what I do, because it's never everything I get involved with I love anyway, but this is an experience that isn't going to be repeated and go on for some time, I think, yet.
Yeah, I totally agree with you. I mean, throughout my years at Motor Trader, it was a fascinating industry. There was always something happening, something new going on. But this now is totally unprecedented. Yeah. So, I think you're right. We're both fortunate to be working through it, and hopefully keeping you all informed on the big stories and what's going on out there.
Definitely. And on that, we have got some more COVID-19 special interviews hopefully lined up in the weeks to come. So do keep your eye out for them. Trying to mix it up a little bit, and it's we now, as we sort of talk about, throughout the show, we've been talking about these restriction lifts and return into the market, and that's sort of some of the interviews will be focused around that, because there's a lot for the industry to consider in how we return to market and at what stage. So hopefully we'll try and get some good interviews around that and share some of the knowledge and thoughts of some of the industry leaders in the sector.
Yeah, well, that's it for this week. So you've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Many thanks for listening. Do join Philip and I again next weekend, and do look out for the latest in our series of special interviews with industry leaders over the course of the following week. Until then, stay tuned for a special interview we recorded earlier this week with Andy Shields of Indicator. Andy's talking about used car prices and sales trends across Europe and how some markets are performing after coming out of lockdown. So until next time, stay safe, and it's goodbye from me and goodbye from him.
Hello and welcome from me, Philip Northard and Curtis Hutchinson, on this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Many thanks for joining us for this in the 8th in our series of special interviews themed around sharing the best practices as our car retailers manage their way through the COVID-19 crisis. Previous interviews you'll be aware of from Sittner's Group's Darren Edwards, Virtue Motors Robert Forrester, the IMDA's Yuma Samani, recently with Volvo UK MD Christian Elverforce, and last week's chat with KPMG's Lee Swinard are all still available to stream on the motortraderadio.com, on Spotify and Apple and Google Podcasts.
So we're delighted to welcome our special guest today, Andy Shields, who is the Global Business Unit Director at Indicator. So welcome to the podcast, Andy, and perhaps you could start by giving listeners just a brief overview of what Indicator actually does.
Okay, well, thank you very much for inviting me on. Indicator, basically we operate in 13 European countries at the moment, including the UK all the way through to Turkey. What we do is every day we analyse the internet for all the used car adverts that are out there, and we pull down about 9 million adverts every single day. We bring all that data into our data set, and then we go through and using various techniques of AI, looking at the photography to make sure that the cars are correctly described with AI, etc. We then produce a whole data set of movement of pricing, of movement of sales, of incoming vehicles into the whole motor trade space from a retail perspective. And we take all that data and then we feed it back, and we in a series of reports and tools for the use of car dealers, for the use of leasing companies, rental companies, OEM reporting, so OEMs can track their dealer activity. So a range of different things all related to used car pricing and used car volumes.
I mean, welcome, Andy. It's a pleasure to have you on the show. I mean, we've kind of known each other for many years across the industry through your background and my background, and I'm sure we've crossed paths numerous times through that. But it's great to have you on eventually. So, in terms of Indicator, you started producing a series of market watch papers themed around COVID-19 and the more recent one of signs of recovery. Can you talk us through some of the key findings and what learnings there are for the UK dealers? Maybe some learnings from what you've seen in the European market.
Yeah, no, absolutely. I mean, we started when COVID-19 initially hit with a white paper, which was a strategic document to really identify how we saw COVID-19 going forward, or at least a range of options on how we saw COVID-19 going forward and impacting the European used car industry. From that, we did a lot of analysis, and then subsequently, every 10 days, we produce this market watch report, which looks at, for the 13 European countries that we cover, both pricing and also volumes. And within that, it's been absolutely fascinating to then track initially as each country went into lockdown, the timing of that lockdown, the severity of that lockdown, and now as we're going forward to have a look at how countries are coming out, and Austria and Germany, the kind of the first two countries that are coming out. So we've got some really interesting information in and around how they're coming out. Overall, I think if I give a sign of what the data tells us is, firstly, in terms of it depends on the scale of the lockdown equals the impact into the marketplace. So if we take countries like Sweden, where and everybody talks about Sweden as being a very light lockdown country, they went into basically a drop of about only 20% of their used car volumes. And have subsequently now recovered back up to 100% position. Whereas if we obviously take Italy, we take Spain, we take France, we take the UK, they went in very, very hard. But there's also that midpoint of countries like Denmark, countries like Netherlands, who have got an intermediate level of lockdown, and they went to about 60% of their natural volumes over the period. And the interesting thing is those countries are also beginning now to do a level of recovery, even though they haven't changed their lockdown rules.
Now, you've mentioned Austria and Germany there, Andy. Now, they're the first European markets to reopen their showrooms. They reopened last month. Yeah. And both markets appear to bounce back really quickly. But how indicative do you think these trends are for other markets? Was there anything that actually stood out with Austria and Germany and differentiates them?
I think, yeah. So if I look at those two markets, Austria first, they released their lockdown rules, and dealers with less than a 400 square metre showroom, so 20 metres by 20 metres, were allowed to start trading as from the 14th of April. From Germany, it was from the 20th of April that all dealers were allowed to open and begin trading. Austria, 1st of May, they just started. So what's been interesting, if I look at Austria, where it's only a partial set of dealers, they've from the 14th to the end of April, they have now got to about 80% of their pre-lockdown run rate overall. Whereas in Germany, where all dealers opened, even though it's a shorter period of time from the 20th, their run rate is now up to about 90% of their pre-lockdown levels, and there or thereabouts. On the sort of 90%, 86% of prior year sort of levels. So what it has been for me really surprising. I've probably been one of the more bearish commentators on the industry, and to see these two markets bounce back as quick as they have done has actually, I'll be honest, has been a surprise. I think the thing we then got to have a look at is, will that get replicated across other European countries, and will it get replicated across the UK? And I think the first thing is, if you look at those two countries, they managed their their infection really well. So there's significantly less deaths per million, significantly less cases per million compared to the UK, compared to France and Italy, Spain. And equally, they are countries with relatively strong GDPs per capita. And so they're very affluent countries overall. So I sense there is an element of these countries having gone in, had a kind of a short, sharpish shock, and have come out, and the consumer is quite confident, and the economy, people haven't realised whether it has it actually hit the economy or not, and so you're seeing this relatively fast bounce back. The real question is going to be, do we see that same level of bounce back coming from definitely the southern Europeans, where Spain, Italy really have taken a battering, both economically and psychologically for the consumer, and dependent on what happens and what Boris does in terms of us bringing us out and how fast the impact of the consumer in the UK. I think people won't bounce back quite as fast and as quick as Germany and Austria, but it's really surprised me the speed that they've moved.
So in terms, I've had the pleasure of obviously seeing some of your data on the recent VRA webinar that you joined, but you talk about obviously the research and data from across the 13 markets. What other sales and pricing trends are you seeing through the COVID-19 lockdown?
So in terms of the overall trends, if I take kind of at a very high level, the markets that have been open for a period of time. So I talked about Sweden before. There the dealers have had time to react. So the market's been down. There has been pressures on the market anyway, and you've seen pricing drop from the 1st of February to the beginning of May by about 4.4%. So those markets that market's dropped down quite significantly. If I then look at countries like the UK, like France, like Italy, frankly, they haven't moved. Why? Because they've been in lockdown. So the dealers haven't been coming in. There's been a few movements in price, but statistically, it's nothing. It doesn't make any difference. And the UK itself is kind of actually 0.4 up since the 1st of May, which is just nothing. It's statistically not relevant. You then got that midpoint position where you've got countries like Denmark who have been open, they've been trading. They've sort of moved about 2%, that middle ground element. Overall, if I then look at kind of pricing in Germany, has been the one that we've kind of done a bit of a more detailed dive down. And it's interesting to see that their pricing, whilst is kind of overall is about 1.7% down, you get quite a significant difference between different categories of car. So the mini segment, the small vehicle segment are all about 1% down, whereas you move into luxury cars and they're about 2.5%, 3% down. So there is a very much a focus in terms of the bigger the car, the harder it is falling. And that kind of replicates the sort of residual value trends that we all saw in the 08-09 recession, where you had this kind of large cars really taking a bit of a battering. One thing that's interesting about Germany is the way that the sports car sector has bounced back and is significantly up. So it's about 30% up on its pre-lockdown levels, and is about 20% up year on year. So actually, there's growth now in the sports car segment, and that's been great. There's still been about a 1% drop in pricing of the sports car segment, but it's just a sign of people coming out of lockdown. In the last recession, when people came out of the last recession, they did have a tendency of having a treat car, and I must go and buy myself something nice. 4x4s and sports cars were relatively cheap because they'd taken a battering. But there is definitely a sign of customers coming out saying, I'll treat myself, I'll buy something nice. And that same trend we see in Austria as well.
That's some interesting points there about sports cars and the appeal in Germany. Has the crisis actually impacted what type of used cars are in strong demand, and maybe also the different fuel types? How are they faring as well?
Absolutely. I think probably the biggest trend is, people have kind of talked about it in terms of, is this happening going to make the consumer even more environmental? This whole concept of the human race is fairly fragile, our planet is fairly fragile, and it's really been brought home by COVID that actually, we've got to start looking after the whole environment much better. And so what we are seeing is a really significant acceleration in the swap from diesel into petrol and into hybrid. So you see Poland probably had the biggest swap. There's been a swing of about 9% of vehicles out of diesel into petrol. Germany about 6% swing, and that's just over a 2-month period. So that's pre-lockdown, post-lockdown numbers for Germany. And again, we're seeing a level of swing into hybrid, where, if you take Sweden, hybrid and electric vehicles are both 33% up from the kind of February period up to the current period. So a real strengthening of the kind of environmental view of life, which bodes well for petrols and doesn't bode well for diesel residuals.
So the swing away from diesel that we were seeing has actually accelerated as a result of the various lockdowns.
Yeah, as people have come out of lockdown, and with the data we've looked at, we've looked primarily not at the whole of Europe, but the exiting lockdown countries, and that's where the biggest, those swings are just remarkable. Just for a 2-month period, to see kind of a 6% swing in Germany in a 2-month period is just wow.
And finally, I mean, there's are there any sort of used car trends for here in the UK market that we can learn from obviously what you're seeing for dealers as we come out of lockdown? We know that there's obviously talks around the consumer behaviours towards public transport and the perception that they may start to move back to ownership of vehicles, and there's a view obviously in the type of pricing points of which consumers will move into, those that haven't necessarily got a car today that may look to purchase one as a consequence of caution around public transport. Have you got any trends that you can share that you've learned from across the European market that you've been looking at?
I think that's interesting. The answer in that is, at the moment, not necessarily, and I'll explain why. I had a fascinating conversation with a dealer in Poland this week, who basically said to me, look, what's happening at the moment, and Poland is theoretically a lockdown market still, but there's a lot of a bit of online, and there's a lot of kind of side trading that shouldn't be going on. So it's running about 40-50% of its previous levels. And he was convincing me that actually that there was a lot of people coming out and historically didn't have a car, not wanting to use public transport, deciding to buy a car, and therefore the market currently in kind of small, older used cars was going to be booming, and it was going to be great. And I looked at that data and went, oh, actually, no, there isn't any. The market is lifting, but it's lifting equally between smaller cars and larger cars, older cars and younger cars. So from that perspective, I was actually surprised that this great theory of a trend wasn't necessarily being reflected. I will say that we're still in very, very, very early stages. So we're going to be looking out for those trends and trying to understand, are they going to happen from that point? The diesel petrol one is definitely there. But the smaller cars versus large cars, older cars versus new cars theory that we had in Poland, don't see it at this stage in that level of detail.
So, Andy, many thanks for joining us today and sharing your views on used car sales and pricing trends across Europe and what the implications could be for dealers here in the UK. I know retailers listening to this will find this very useful as they prepare to open their businesses after lockdown is eased or lifted. So many thanks for coming on.
Oh, you're very welcome. Thank you for having me on the programme.
Yeah, thanks, Andy. It's been an absolute pleasure, and it's get to see the market watch reports that you're putting out. So I mean, we'll obviously keep in touch and potentially get you back on at some point in the future as we start to see what the market looks like on post-lockdown, I suppose, at some point, whenever that is.
Be delighted.
Okay, so that's all for now. Many thanks again to Andy for joining us. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's so important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday, but do watch out for more special podcast interviews as we work through this crisis. Until then, do stay safe and stay well.